Hello, everyone, and welcome to CoTec's live event. I'm pleased to introduce their president and CEO, Jeannine Traeger. There's been a lot of recent news coming out of CoTec lately, so today Jeannine will talk about the recent developments to the CoTec story. If you have any questions, please feel free to submit your questions on the right-hand side of your screen at any point during the event. If you tune in late, there will be a recording. Just as a reminder, it will be available on six.com in the coming days. And I can ask the questions at the end, or if it makes sense, and if it's all right with you, Jeannine, I'll interject questions if clarification is needed and the questions are relevant to the conversation at hand. But with that being said, I'll leave it to you to start us off.
Thank you so much, Carl, and thank you all who've joined this conversation about the way in which CoTec is progressing. As Carl mentioned, we've made a lot of announcements recently. We've had an enormous amount of activity, but we're very excited that we're on the right track. We see great vindication from the way in which commodity prices are moving, the way in which the world is moving towards a greener and more efficient way of extracting commodities. And as you'll see, while I describe to you the developments, the commodities that we've selected are also becoming increasingly strategic and important to the world. But most importantly, yesterday we made the announcement about taking an option over the Lakshanin deposit in Canada. And that is a very important investment in itself. But I think it's super significant for CoTec in that it is the first vindication of the CoTec model. And we hope that that is the first of many similar announcements we are going to make. But before going into the details of that particular transaction, it might make some sense to remind you what CoTec is about. CoTec, although a small company and to my mind significantly undervalued, I think the value is multiples of the current market prices I'll describe in the coming hour. CoTec has very big ambitions, and CoTec really would like to be, over the next decade, the model for what a responsible 21st century commodity extraction business should be. So we are, in a way, a pioneer. Obviously, the industry has a lot of existing players, but we are a company which is using technology, disruptive technology, to create a very green, very responsible, very low carbon emitting business which produces the commodities that the world is going to need. And in a way, we hope to become the sort of Tesla or the eBay of the commodity extraction sector. And I'm pleased to say, although it's a somewhat pioneering space and there's not many people around who understand what we're doing, and it's a sort of lonely path, I think we are definitely ahead of the curve. We're seeing lots of opportunities. There isn't much competition, and we are already creating large amounts of value for our shareholders. So our model is to find really cutting-edge disruptive technologies, take small stakes in them, but the rights to apply those technologies to assets. And ultimately, what we would like to have is, say, 10 disruptive technologies which we're involved in, and we add a lot of value to those technology companies through our history and our network, helping them with strategy, with financing opportunities, and obviously connecting them with customers. But our main aim is then to take those ultimately 10 technologies and apply those technologies to, in the end, hopefully 20 or 30 different asset opportunities. And generally, we're looking for assets which, without the technologies, are not worth much. they've generally been dismissed by the markets as too difficult, too low grade, too short life, mines that were stopped decades ago. And obviously, a large focus of our business is waste, recycling, the circular economy, getting more out of what we've already had. And we believe we can acquire those assets for very little. And with the technology and those assets, we can create a business over a decade, which is effectively like 30 mini recycling or mining plants, but which we have created at quite low entry costs, and we can create a lot of value therefore for our shareholders. And so the importance of yesterday's Lakshanin announcement is that it's the first opportunity where you see CoTec collaborating with the technology that it's invested in, namely binding solutions, a revolutionary pelletizing business, to acquire an asset. And in this case, we have taken an option with a ratcheted payout structure to the existing owners of the deposit. But we've got an option over a 100 million ton waste deposit, tailings from a mine which was operating decades ago and closed, I think, in 85. And if we can apply the technology, which we're confident we can, because the binding solutions technology is working well with the material from Champion Iron Ore, which is a neighboring mine in the region. So the geology of those materials are very similar. We will have created effectively a mini iron ore mine with a 20-year life for quite low value. And the net present value of that mine is then considerably greater and in fact multiples of the current market value of CoTec. We think that we will be a majority owner of this mine, but we will be bringing Binding Solutions in as a minority shareholder in exchange for utilizing their technology. But this will be a mine which CoTec will be able to consolidate the earnings from. And unlike most traditional mines, which can take a decade to come into production, we believe the production from this effective deposit can occur within 2 to 3 years. We are obviously going to be working with local stakeholders, and we are targeting completion of a feasibility study within the next couple of years. So we think that this is a very important milestone for CoTec, because it is effectively the first example of the way in which we plan to use technologies to buy cheap waste and otherwise disregarded deposits and extract considerable value from them.
Could I just ask you a quick question, Julian?
Sure.
In regards to this recent news, you just stated that CoTec would be a majority shareholder of this proposed mine. Is that aligned with your business strategy? Because it's capital intensive, this industry, correct? If you were to be the one spearheading this project?
Well, that is our strategy. Ultimately, our strategy is to be majority owner of a lot of waste assets. But the capital intensity of bringing this project into production is a fraction of what a traditional mining business would be. We think it's 50, $60 million, whereas bringing in an iron ore mine normally would be $500 to $1 billion. So it's really a fraction of that. And because a lot of the underlying materials that we're producing are going to be super green. So for instance, here, you don't have to mine. In the first instance, so the carbon content of the material that we're going to be producing is very low. And I haven't talked about this yet, but one of the great attractions of binding solutions is that it pelletizes at ambient room temperatures rather than the 1200 degrees, which traditional pelletizers have required. And therefore, we think that we will be a great partner for the Quebec government and other people who are interested in producing super low green steel out of Canada. So we think that there are a lot of sources of funding, but the CoTec model is going to be not to raise large amounts of capital at the CoTec company level, but instead bring partners in at the operating company level. And so far, we've found lots of partners who are interested in particular materials, be they iron or copper or rare earths, which are the three main commodities we've been involved in. And that does lead me to a discussion about the commodities we've selected, because I think we've so far been fortunate in selecting the commodities which are considered strategic, particularly for the US and Canada. Obviously, there's been a lot of hype about rare earths, and that's increasing as China tightens their grip on those commodities. But it's been interesting to see in the last couple of weeks, I think that the Biden administration has also included copper, which is the most recent technology we've invested in, as a strategic material. So I think that we're definitely in the sweet spot of both strategic materials and green materials. Just to talk a little bit more about Lakshanin, we are now going to start progressing resource drilling and bulk sampling, and we're targeting a PEA in early 24. We are identifying drilling contractors to help then with the bulk sampling, and an independent lab has been commissioned to help us do that. We expect further details on the joint venture with Binding Solutions to be announced in the coming month or two. But as I said, the expectation is we will be the majority owner, and we will have with this asset a long life plant with a 20-year life. It's going to be cost competitive, targeting DR grade pellet material, and that we expect will attract a significant premium in the pricing compared to conventional blast furnace material. The Lakshanin site retains existing infrastructure from the previous mining activities. So there's power, there's hydro, water, there's road and rail. And so the capital costs are going to be much lower than you would expect for a mine. We're confident over the next couple of months that we'll be able to make further announcements and updates. So that's really a quick briefing on the announcement yesterday. But over the past quarter, there have been lots of other very positive developments. First of all, the large Australian conglomerate called MinRes took a stake in the Binding Solutions technology at double what our cost was, and we only invested last year. So that's been encouraging. And equally importantly, there was a funding round at our Magan investment. We own 17% of that at $150 million, compared to our original cost, which was around $12 million. And so you will expect to see a big uplift in the profitability of CoTec when we make our results announcement for Q2, which should occur in the next couple of days. And I think all of this is reinforcing our excitement that we're definitely on the right track here to build something super green, part of the transition story, but that is really scalable and we can bring great value to the shareholders from. I thought I'll also talk a little bit about recent announcements on our magnet recycling business, Magneto and Hypermag, because that again is a business like to some degree Lakshanin, where we're going to be a major shareholder. In this case, in the US magnet recycling business, we'll have an effective 60% stake. So again, it's a business where obviously super strategic. The US government's very interested in utilizing the magnets they've already got circulating in the US economy to create new rare earth magnets rather than having to rely upon importation. And so again, it's a business where we're going to be raising funding at the subsidiary level rather than at the CoTec level. But I think our effective 60% stake in that business is super valuable. And there have been a number of recent developments there. This will be our first revenue project, and we're targeting production in 25, 26. We've closed the buyout of Hypermag. So we are investing now in a business which owns all of its equity. We've advanced the US concept study for how the US business will work, and we're expecting to move into a feasibility study in late Q3 or Q4. And the idea would be to have 3 sites, a hub and spoke structure, potentially a hub in Dallas. And with that business plan, we are engaging with the US government, hopefully to get some grants in the latter part of the year. And there'll be further development on the rare earth side coming up in September, where we are going to be doing a conference with the University of Birmingham in the UK. But what's also interesting about the business we've invested in is that they are already having a plant in the UK. They're having a plant that they are building in the EU, which should be finished by early next year. So they will have revenues not from the US, but from other countries, in 24, and then we expect the US to come in 25 and 26. So each of these businesses I've talked about has a value considerably in excess of CoTec's current market cap. We think that if we can do another 10, 20, 30 asset deals like we've done for Lakshanin, we'll have a business that's worth billions of dollars. And I have in the past built several businesses in the commodity extraction space, which have grown to multi-billion dollars from very little, and hopefully CoTec will be another one of those. So we're super excited. We're very active. You should look out for our results announcement in the next couple of days, and we're on the right path here. And the Lakshanin announcement is an important milestone in validating the model that we're pursuing. So I'm putting my money where my mouth is. I'm increasing my shareholding all the time when possible, and it's all good news.
Excuse me. Do you think the valuation where CoTec is trading at currently is because this industry is not really reciprocal of change? It takes a while for change to occur, or why do you think you're trading at such a valuation?
Well, I think I think it's many reasons. First of all, there's very little coverage of smaller cap companies. I think although we have a listing on the in the US now on the OTC, our main listing is in Canada, and the Canadian retail market has been struggling. But also, our business model, because it's pioneering, is more complicated than a sort of a normal story, because it's a morphing story. We start with the technology, with small stakes in technology, but we're not actually a technology incubator. We're ultimately an operating business, and so I think people find it difficult to peg us. Are we a tech business? Are we a commodity extraction business? And so there's in a way a price to pay for being new and innovative. But I think as we demonstrate more and more profitability and we get more of these assets, it will become clearer. And now, we have effectively 4 technologies that we've invested in, and we have 3 assets. And I think when the number of assets is bigger than the number of technologies, people will start to see that that's our main focus. So, we're very patient, and fortunately the directors, including myself, have the resources to keep funding the business. So, we are moving along, and the lower market cap is an opportunity as far as we're concerned, being on the board. But we'd obviously love other shareholders to come along for the ride.
Now, as an operating business, are you generating any revenue from these assets yet?
We are generating very small, through our stake in Binding Solutions, which has revenues. Effectively, there is an operating business there, but our stake in Binding Solutions is quite small. As I think we said, the magnet recycling business should have revenues from next year, but the big revenues will come for us in 25 and 26, when we would have both a Lakshanin and the magnet recycling business in the US generating revenues, where we have effectively controlling stakes, so we can demonstrate that. But what we are seeing is very large profits being generated already from the investments in the technologies we've made, and also, as I mentioned, in Magine, where we invested at a 12 million valuation, and the last round was at 150.
Yes, and why don't you go ahead and touch on the $17.5 million financing of that Binding Solutions last week? How does that affect you? Is CoTec experiencing dilution from that raising, or why don't you touch on that funding?
Well, CoTec has a I think it's like a 3% stake in Binding Solutions, so there will be some dilution, but it's not going to make a huge difference to us. I think the significance of that investment, which was done at a $160 million valuation versus our $70 million initial valuation, is that MinRes, the company that's made an investment, is enormous services and construction business for the mining sector. And so having them on the register and having them interested in the business is going to really turbocharge the progress of Binding Solutions. And so the natural thing for us with regards to Lakshanin would be to use MinRes to build the plant, because they'll know how to build these plants and they'll be able to roll them out around the world. So I think the benefit for CoTec is going to be that we will have a construction partner who's super experienced and can deliver the plants for all the waste projects that we're going to be involved in, because Lakshanin is just the first. And as I said, hopefully there'll be 5 or 6 or 7 iron ore projects like this, and we are already working on several others. And it will make it much more efficient for us. So it's a great benefit.
Thank you. Appreciate that comment. Can you touch on why Lakshanin, what caught your attention on this project specifically, and why it's a good match for the binding solutions technology?
Well, first of all, as I said, the region that it's in, which is in the Labrador Trough in Quebec, works well with binding solutions technology. We have tested our materials with Champion a lot, but also with IOC, which is the Rio Tinto mine in the area, and it appears to work well. So we don't have to reinvent the wheel here. And then, there's 100 million tons, enough for a 20-year life. And it was, an asset which has closed. It was under the control of the government. And so, this is something which would also get and is getting governmental support. So we think it's a combination of geology, size, location, all of which makes sense for us at this time. And CoTec, being a Canadian listed company based in Vancouver, this is in our backyard.
Thank you. I want to bring in the audience right now. There's been a lot of questions submitted, so I'm going to address some of these. First question that was submitted was individual tuning in from the UK, and he's wondering, as a UK investor, how can he buy CoTec?
There are ways in which you can buy CoTec from the UK, and if you would like to contact Eugene Herken, who's one of the individuals at CoTec, he can run you through the way in which previous UK investors have participated in the story.
Thank you. And you mentioned your background a little bit, but Dominic would appreciate hearing what you did prior to Anglo Pacific. What other companies have you built? Just talk about your resume.
Sure. I mean, I have been investing in the mining and commodity extraction sector since 2005. Initially, we made quite good money from a company called African Minerals, which ultimately got into trouble, but we got out of it. And then we found a business, a coal business in Canada called Western Coal, which was going bankrupt. We refinanced that at a low valuation and ultimately sold it for $3.5 billion to Walter Energy, a company in the US. And following that, we bought some copper mines in a company called Mantos Copper from Anglo American for $300 million. And we merged those into Capstone Copper. I think it was last year for $1.5 billion. And, we continue to have a stake in Capstone because we think it's going to do really well with the startup of their Monteverde mine. And most recently, we've announced we're acquiring a thermal coal mine in Australia. This is all through Audley at less than 1x historical EBITDA. But after I was at Anglo Pacific for 8 years, increased the revenues at that time. In my first year, they were $5 million. When I left, they were close to $150 million. I really decided that this space that CoTec is occupying, which is at the juncture of disruptive technology, strategic transitioning metals, green impact investing, and utilizing the assets which are considered othered or worthless by the investing community, I thought that was what I really wanted to dedicate the next decade of my career to. And so I'm super focused and excited upon it. And, I think we're on the right track, and quickly we are adding a lot of value.
Is there a specific commodity that you see that certain technology could be the most disruptive? Like, what is there a specific commodity that's really catching your attention?
Well, the reality for CoTec is that we try to marry unique disruptive technologies with the commodities we're interested in. Obviously, there are lots of competing, like hydromet technologies or direct lithium extraction technologies or new battery technologies, which are also strategic, but there's so many of them. It's sort of risky to pick the winner. So we're having to marry the technologies and the uniqueness and the world leadingness of those technologies with the commodities. And so thus far, we've really focused on iron ore, on copper, on rare earths. We are interested in graphite and graphene. We're working on some things there. But we're trying to look in less crowded spaces, yet still with commodities which we think are going to be very important.
Why don't you expand on the copper and what you're doing in the copper industry? Because Jasper was wondering if you have any tech in copper, so maybe elaborate further on your involvement in that space.
Yeah, so we have an investment in copper. We made recently by a company called Sabo. I don't know if Jasper's familiar. There's a company called Jetty Resources, which uses bacteria to process low-grade copper deposits. And that has a valuation in its last round of over $2 billion. We invested in Sabo, at around $100 million. So we think it has a lot of upside. And Sabo, like Jetty, can be used for low-grade copper extraction, lower grades than work for concentration and smelting. But it does so with higher, so far, recoveries and faster recoveries than the competing technologies. So we think it could be a world beater. And what's interesting about this particular niche for copper, which is generally between 0.4 and 0.8% grades, is that historically they've been dismissed as too low grade to be economic. So it's the same model as we are pursuing with binding solutions and iron ore waste. Finding things that are considered impossible, worthless, but with the technology, suddenly they have economic value. And so we're searching now, starting to search for copper deposits where we could potentially apply the technology, and again, on a sort of majority ownership basis, because those technologies the deposits will not be very expensive, since without the technology, they're pretty useless.
Right. Going back to binding solutions, we have a couple of questions. First question, has it been proven out yet? Is there any live examples of it?
Well, binding solutions comes from a technology which was used to make pellets for British Steel at Scunthorpe, I think. And they produced 500,000 tons of briquettes over the years using the technology. So there is a long-term, real-life example of the technology working. But we are we have a pilot plant in the Midlands, and one of the first things we're going to be doing with MinRes is to build a demonstration plant, probably in Australia.
Thank you. Jasper also has another question in regards to binding solutions. Is it your biggest single investment? Is there any optionality to grow your interest if it progresses as anticipated?
We could make a further investment, but our idea is not to, as I said, own large stakes and make lots of money from the technology investments. We think applying the binding solutions technology to a number of asset opportunities will create huge hundreds of millions of dollars of value for the CoTec shareholders, and that's our focus. The model goes back to, we are not a technology incubator. We want to find technologies, help them to develop, own small stakes in them, but get the rights to apply the technologies to assets for them. And we can make a lot of money for binding solutions as well, as even if it's a minority shareholder in the assets we're involved with.
How has the reception been to potential investors of CoTec when you tell them this is your business strategy, as opposed to being an incubator? You want to be more of an operator. How do they receive it?
Well, I think, the retail investors, I think, struggle with this. But what's interesting so far is that really large strategic investors, Silicon Valley investors, private equity funds, sovereign wealth funds, Japanese trading houses, and just general commodity trading houses, they are very, very interested in what we're doing. They love the model. They see what we're doing is sort of helping to invent and create a new business for the 21st century. And so we're engaged with a lot of people at that level who think what we're doing is super interesting. And with every announcement, our dialogue with those parties improves.
Thank you. We have another question here. Interested to hear about the SIBO technology and CoTec portfolio. How is it different to the traditional leaching tech, and what is CoTec's plan for the technology?
Well, I think it is, as I said, it uses chemicals rather than bacteria. But the idea is to deploy it on waste from copper or low-grade copper deposits, where we believe we can extract the copper in a very economic fashion. So if you think about CoTec as a sort of diversified commodity extraction business, there would be a copper division using the SABRE technology, which could have 10, copper brownfield restarts, or waste deposits which we are extracting copper from. That's the vision we have for copper and SABRE and CoTec.
Okay, great. In regards to the rest of the year, in Q4 of 2023, what rubric are you using to determine if these next investments are a fit for your portfolio? Why don't you go ahead and talk about your evaluation of potential investments?
Well, the best way to make money in the space is to buy cheap. So we always look to invest in the technologies when they have already been properly invented, they're the lab scale, but they need to be scaled commercially, so we don't overpay for them. And then the actual assets, generally, as I said, are low-cost entries because they are waste, or they are short mine lives, or they have rehabilitation liabilities, or they are mines on care and maintenance, or marginal mines. So we're looking at a whole bunch of assets which are not considered valuable, but with the technology we can make them valuable. So they have to be very cheap for us to buy them in the first instance. And of course, we're focusing on good jurisdictions, on good management teams, as we talked about, the commodities which we think are strategic. There's a lot of filters an investment needs to go through.
Thank you. Excuse me. For these future investments, is there a bottleneck or a restraint? And I'm not trying to take away that you haven't been an active company in 2023. You have been, but what do you think would be a bottleneck, if any, in future investments?
No, I mean, we look at lots of investments. We've looked at about 250 so far, technologies and investments, and we've made, as you see, a handful. So, we're not going to be a deal-making machine, but if we can make one or two new technology investments and one new asset investment for the rest of the year, I think we'll be doing, great. So we're very careful because effectively the board owns 60% of the equity. So every dollar we invest is 60 cents of our money. So we don't want to waste it.
Definitely. And I believe, we might have just had another question here. 1 second. So Dominic has a question. How important is Julian's network and the boards to finding business partners, especially at the government level?
Well, I mean, we have a great board. It includes Tom Albanese, who ran Rio Tinto. We have John McGaw, who ran Rio Ventures for a while. We have Margot Nordy, who was very senior at Stanford Bernstein. And so we have good engagement with the US government and with the UK government. We have a great network, but we're also pushing on an open door because they are super interested in the things we're doing and the commodities we're investing in, and the way in which we can help, create a lot of new copper supply in the US for the US, new rare earth magnets, out of the US for the US. We're absolutely, singing from the same sheet here.
Excellent. Well, I'd like to thank the people that submitted questions here today. I appreciate it. I'll leave it for you for any closing remarks, Julian. And just as a reminder to everyone that if you did tune in late, the recording will be available in the coming days. So just keep out for that. But go ahead and close us off, please, Julian.
Okay, with pleasure. Well, thank you all for listening to the story. I hope you understood my excitement through the discussion we've had. As I said yesterday, announcement is very significant because it's starting to validate the model of using the technology to buy assets super cheaply. And I hope in the coming months you'll see the CoTec share price performing accordingly as people see the value that we've created more and more, and that you'll start to see with the results announcement in the next day or two. But Lakshanin has an NPV of hundreds of millions of dollars. We'll have a majority of it, and so it's just the first big step in creating the new model of responsible mining in the 21st century, which we're all about. So hopefully you'll come on the journey with us, and promises to be exciting. We'll be doing good for the world, but we'll also make a lot of money for our supporters. So thank you for your time today.